you for coming along to this session. So this is the second ESG event of the year. So it's for the PLCA Investment Sector Group, communicating on ESG and sustainability, looking at the investment sector perspective. As we're all aware, ESG and sustainability have grown in prominence in recent years, creating both opportunities and challenges for those in the investment sector. We're joined today by two experienced communications professionals who each offer unique viewpoints on their respective areas. We have Simon Hildrey, Chief Marketing Officer at Liontrust, who has responsibilities across marketing and communications at the FTSE 250 listed asset manager. We're also joined by Hudson, Head of Public Relations for EMEA at MSCI, the global provider of stock market indices, portfolio analytics and ratings, which, as most of you probably all know, also include their ESG ratings. So an interesting discussion to be had. Just a housekeeping note before we kick on, there is both the Q&A and the chat box for questions. We've got a few sort of different areas that we're planning to cover off. So what I would recommend, if anyone's got any burning questions relating to something we're talking about right now, please do use the Q&A and chat box. At the end of that section, my colleague Kuldeep will review those and we'll cover them off then. And there will also be we'll try and keep 10 minutes back at the end for any sort of more wider ranging questions that you might have for our panelists. So without any further ado, we'll crack on. So first of all, really just a bit of a scene setter, looking at some of the emerging trends in ESG for the investment sector. As already said, obviously it's a topic that's been rising hugely in prominence over the past few years, with companies and investment companies within that responding to multiple stakeholder pressures, which we'll all be familiar with. And this is front of mind at the moment, not least obviously because we have COP26 literally starting this weekend, forcing policymakers and businesses to confront the issue of climate change specifically. So first we'll look at some of the emerging trends and themes that comms professionals need to be prepared for. I guess just to kick off before I go to Laura and Simon, given COP, it's obviously front of mind for many of us, so we might want to just have a quick shout out to that, and we'll obviously, I'm sure, come back to it throughout the session. I mean, obviously it's everywhere at the moment. There's lots of media interest, but I think from what I've seen, certainly with some of my experiences, that it's not really enough for companies, whether you are an asset manager or a company outside of the sector, to have a target, be committing to something. There is scrutiny and there will be increased scrutiny following COP26 on what those plans are that are in place to actually get there. Companies, it's not good enough to just come out saying we're going to do this. You really need to have transition plans and be able to be held to account on your progress as you go through. And additionally, just a point to make that I've seen as well is this, there's really nowhere to hide for companies, even if you need to get your stuff in order, really. And anyone can get caught in the crossfire. And I think increasingly what we're seeing is, a few years ago when I was working with asset managers, it was very much the investment view on companies that was sort of at the forefront. Now it's asset managers themselves obviously being held to account a lot more, and not just asset managers as investors in companies, but also NGOs are increasingly being now called upon by journalists to provide that independent view on company announcements, and they'll provide it. So any statements that we have need to be particularly watertight. Laura, I just wanted to bring you in to ask if you had any specific thoughts on the emerging trends and themes that you're seeing, specifically in ESG, and potentially as well with COP coming up too.
Yes, so there's been, there are a few emerging and I think probably in motion trends that we're seeing at the moment. So firstly, you've got the shift within ESG itself that's broadened out into climate in the last 12 to 18 months, whether that driver has just been COP or whether it's been driven by investors decarbonising. I think there are a number of different factors driving this. But that's, I think, only going to gain momentum coming back to COP, probably due to COP. But also, I think a large driver of that is being pushed by is investors who are decarbonising their portfolios. So particularly companies, those on the listed side, they're having to disclose more information, are having to be transparent, which leads very much into kind of the next point, transparency. That's a clear trend that's coming out. Companies have got to play their part in providing it clearly. I think mandated disclosures are high on the agenda for COP next week. Fingers crossed that we will see it. Coming from a data company, we're very excited and hope that this is something that we get clarity on. But then also with all these trends, we're seeing more scrutiny, and that's something that I've definitely noticed in the last 3 years. If stakeholders have got more knowledge, so stakeholders, media in particular, you're seeing investors have more knowledge, and with that comes the inevitable scrutiny.
Thanks, Laura. Yeah, I think the mandatory disclosure regulation is going to be a really interesting topic for us to be keeping an eye out on. And I guess that comes back to that point around being held to account. You know, yes, you're having to at the moment because of, you know, journalist pressures and media pressures from our job and where we're coming from, but it won't be long, and it certainly has already started where, you know, companies at all levels are actually, it's going to not just be a nice to have, but something you actually have to do. Yeah. And the way that they publish their financial results quarterly, every 6 months, climate disclosures will just become a norm. Thanks. And Simon, from your point of view, obviously you come from Laura's got, I suppose, a bit more of an institutional viewpoint here, and yours is perhaps a little bit more with the retail investor in mind. You know, any thoughts from you, I guess, specifically on COP as well, but more broadly in terms of, you know, the emerging trends and themes that you're having to be prepared for?
Yeah, I think there's quite a few. I mean, I think picking up from what Laura said, definitely, obviously, climate change. Obviously, COP has brought that under even more focus, but it's been a growing trend for some time. I think the other one I would definitely add to that is diversity and inclusion. Obviously, finally, rightfully, is being seen as much more important, much more focus on that. I think that's only going to become ever more important going forward. So I think it's definitely climate change, diversity and inclusion. I think the other thing I would say, just before talking about a few points, is that sustainable is growing. You know, this is not, you know, there's still some talk about, is this a bubble? Is this a short-term trend? I think we would all agree that this is a growing trend. It's becoming more and more mainstream. And I think during this panel, we'll probably talk about the fact that sustainable is now is an important factor across the business, not just whether you've got a sustainable investment or not. And I think that's a particularly strong theme of businesses having to show their sustainability, which, picking up on what Laura said, I think, you know, our research shows that, you know, 86% of wealth managers and 68% of advisors say that more clients will invest over the next 12 months. You know, I think 75% of consumers in our research says sustainability is important, but only about half of investors actually said in the research that they invested. So I think, you know, there's significant growth there. I think in terms of comms, one of the important factors is still around investment performance. The research shows that the biggest reason why people don't invest sustainably is still because they think they're going to give up on performance. I mean, it's still around about a third of people that we ask say that. So I think that's still a trend. That's still an ongoing trend that I think we all, as marketeers and comms people, need to bear in mind. So I think showing evidence of performance is important. I think the second most important reason is 11% say they're unclear what constitutes sustainability. So clearly there's still, I think we'll come back to education, but there's still education. I agree totally with Laura's point that more people are becoming knowledgeable. But I think another trend is growing disparity, actually, or diversity between knowledge. I think what we're seeing now is that some people are very knowledgeable, very sophisticated in terms of what they want to see from companies, but I think you've still got a lot of people that are only just beginning to look at sustainability. And I think that difference in content in terms of dealing with those, that wide spread of knowledge is important. I think we all have to bear that in mind. Obviously, that still means there's a big role for education. I think transparency of information, Laura mentioned that. Definitely, that's becoming ever more important. I think there's more emphasis on reporting the impact of investment. And as Laura said, there's a broadening in stakeholders, people that are interested in this subject. It's become much broader. It includes shareholders, it includes people looking at their suppliers, as well as clients and journalists. I think just in terms of impacting the business, what we're finding, as in my role as head of marketing, is the importance of consistency. I think we'll come back to this, of messaging across the business. There's hardly an RFP now that doesn't ask about sustainable, whether it's a sustainable team or not. And we're being asked right across the business about sustainable, and therefore it's really vital that messaging is consistent across the board. I think the final thing I would say is greenwashing. I think this is actually becoming a bigger issue, obviously, as the industry grows, as funds proliferate. I think our research shows that 73% of wealth managers, 60% of advisors say they're worried about greenwashing. That's been climbing, that's been growing, not becoming less. And interesting enough, 19% of wealth managers and a whole 47% of advisors say they're not confident or only slightly confident in identifying greenwashing, which again, I think all of this shows what a vital role there is for marketing and comms people as we go forward.
Yeah, absolutely. And I guess with your marketing hat on, there's an awful lot of challenges there for you. How are there any sort of new things you've had to put in place in the last year or two or three in terms of, trying to make sure, given that disparity of knowledge, that you're not, talking down to people who know their stuff? How do you balance that? What have you found works?
We are providing more content. I think the content team has grown. The level of things like videos, virtual conferences, literature has grown. Incoming questions has grown massively. The journalists definitely, it's the most common question from, obviously our team has grown anyway, so I think that's to be expected, but I'm sure it reflects what other people are finding. We're getting more and more. It's the most common question we get now. And also we get a lot of questions from direct investors. These aren't people that are invested with us. They may invest through a platform, but retail investors are coming to us directly to ask questions about our funds, about sustainability more generally. So we're seeing a lot more incoming that we're having to deal with. And it's just become a much bigger part. We're trying to do a range of levels of content. We've brought in new reporting for our funds, and obviously in-depth reporting for institutional investors, and we're still trying to do the educational, and we're trying to, I think we'll probably come on to it, but when we communicate about sustainable, we do try and make it very clear and really focus on storytelling. And we need to try and personalize content to people's knowledge, but I think if we can make it clear, engaging, storytelling, I think it will appeal across the board. And I'm sure we'll talk about things like individual stocks later on.
Yeah, we do come on to that. Actually, that transitions quite nicely to our next section in terms of sort of your roles as comms professionals. So I guess just before we jump into that, Laura, did you have any final comments on the sort of challenges or themes you're seeing that you wanted to add?
I think it's just the point, post-COP, I think you're going to see more scrutiny on those net zero targets and commitments that companies have committed to or put into the marketplace, whether that's by investors, whether it's by their own employees, whether it's by the media. I was on a call with the FT the other week, and they mentioned they're keeping a log of kind of financial services companies' targets. They come to MSCI because we're able to give them the data to show them whether these companies are aligning with those targets. I think there is going to be much more momentum on that. And I think as communications professionals, we need to be prepared to that point again around scrutiny, transparency, Like, you've got to make sure that what you're putting out into the market is robust and you're able to demonstrate progress. There are some bold targets out there. People have come out and said by 2030 they're going to be net zero. Like, I think as a communications professional, if you're thinking about reputation management right now, you're pushing up to that C-suite in some of those bolder claims. Can we do this? Are we going to be on target? Because there is real accountability out there now.
Yeah, it's interesting you say that. I've seen at least one today, quite large. That's what I'm come out with.
I think everyone probably saw the FT moral money EY piece. Like, there's more scrutiny, and it's our job. It's now just another faction within that reputation management piece, but one to be taken very seriously.
Absolutely. Just a reminder to all of our participants watching, is if you do have any questions, feel free to use the chat and the Q&A box as we go. Kuldeep is keeping an eye on those and he'll chip in. Kuldeep, was there anything at the moment before we go on to the next section?
No, nothing at the moment.
Great, perfect. And as a reminder, we'll obviously have some time at the end as well, but if anything burning on each of the things we're talking about, please feel free to ask questions as we go along. So yeah, I guess, Simon, actually the next section picks up quite nicely on your last comments around sort of, you know, the role of comms and marketing and the fact your team's getting bigger and everything that you're up to. I mean, how has the rise of ESG impacted the role of, you know, comms, marketing, and also the structure of the team that you're working in?
I think the first thing I would say is that I think what sustainable enables you to do is, like, you can emotionally engage with people in a way that I think is very difficult with anything else in investment management. You know, I think, you know, as you can see, people care about climate change, plastic. You know, we've seen it with the pandemic. People care about these things in a way they don't about a yield curve or PE ratio. You know, I think you can reach far more people in and engage them with investment in a way you can't do elsewhere. I think this makes marketing comms people role even more important. I think the amount of time and resources I suggested earlier that we've devoted to sustainability has increased significantly. Certainly since we bought the team 4.5 years ago, but particularly over the last 2.5 years, I would say. We've obviously focusing increasingly across sustainability across the business as well, increasing number of reports, both for the things like PRI, but also just, you know, bringing out reports that clients want to see of the sustainability of the funds, the reporting, and also the business. I think what this does is all of this opens so many possibilities and opportunities for us, and particularly around storytelling. I mean, I think there's so many stories that people can relate to, as I suggested, you know, energy transition, healthcare, digital economy, cleaner, safer transport. I mean, all of these stories, I think we can bring to life as marketing and comms people. And I think, you know, particularly things like videos, infographics work really well. I mean, if you allow me, I would just, you know, something that we've done. I mean, June last year, we filmed a virtual sustainable conference at ZSL London Zoo. We sponsored ZSL for about 9 years. And the sustainable team have been working with ZSL on biodiversity. So the alignment is really strong, you know, and filming the head of sustainable while a lion appeared just behind him, you know, for our virtual conference. You know, it brings things to life and gives you opportunities that has been harder, and that we're now bringing across to the other investment teams. So they've seen what we've done with sustainable and how we've related that to real life. And I think that's having a positive impact on how we communicate and market all the investment teams at Liontrust.
Yeah, brilliant. And I guess I know one thing you mentioned in the last section we were talking about is things like, you know, RFP. It's kind of all, it can't, I guess, and something I think we've spoken about before is, you know, PR can't really operate in its own bubble in isolation, and there's a real need there for, you know, business. And I guess in your marketing and comms role, it's perhaps, you know, a little easier for you to join those dots. Have you got any advice for us comms lowly comms professionals who just have a comms title on how we can help join things up more for the companies we work for.
Yeah, I mean, I think the storytelling works across, works whatever distribution channel, whether it's social, whether it's paid for, whether it's PR, or with clients. And I think it's always, that integration has always been really important. But I think picking up on Laura's point about people, keeping records and coming back to check, I think this area has just highlighted how even more important it is that everything's lined up, everything's in agreement and consistent, because I think there's so much focus that clients and other people's interested parties and stakeholders will be scrutinizing that so much more. And if they find inconsistencies, that will raise flag for people. And I think, it should be natural really for that to be joined up. It's the same, the storytelling that we can do across it works very well for us in terms of distributing those stories across different channels.
Great. And Laura, just coming over to you on sort of a similar question in terms of how the rise of ESG has impacted your role. Obviously, since you've worked at MSCI, I think the ESG ratings probably launched, and it's become a much bigger part of the business for you. And I suppose you've got the two sides of it, the investors and then actually being MSCI as a corporate. I mean, how's that impacted both the sort of proactive promotional stuff you're doing, but also the reputation for the business as MSCI's comms lead?
Our communications team has a joke at the moment that we have all become sole ESG communication practitioners in the last 18 months to 2 years. And we are all enjoying it, because to Simon's point, it's things that you can see more in your day-to-day life. You're like, sometimes in finance and investment, things can be almost sort of removed. They're quite intangible, but you see, I don't know, you're seeing the weather changing, you're seeing things happening, but then you can see the changes that you're helping to try and drive here. Now, communications is always operated cross-functionally. I think we're all in agreement that doing our jobs without collaboration or consultation, it would be near impossible. But communications, I think, when it comes to ESG, when I say MSCI Incorporated, the actual business, the corporation, your communications has become more integral, because these are big business decisions that we've had to make, and any organizations had to make. But reputation management is such a big part of the output. And even down to timings. When do you put out your net zero commitment? You've got to think about these things in collaboration with your investor relations team. The corporate responsibility division, it might have only been one person a few years ago. Those have all grown. Communications, I'm a part of the MSCI Corporate Responsibility Committee, but actually communications has probably, I think, in most organizations, taken a more active role in some of those. I've been pulled into discussions around digital business cards. Now, kind of business cards isn't something communications has probably ever been involved in. Simon and his marketing team might have done, but it's not something that I would have done. Carbon offsets, again, those discussions that have taken place with that C-suite, that's where communications has had the ability to influence. Certainly something I've enjoyed working with is driven on our gender pay gap. These are things, and equality pay and things like that, equal pay. So understanding, and again, working with different functions, with HR, with legal, with investor relations. So having that kind of role, that has definitely, I think, changed. Some organizations, you've seen the bigger profile of communications within that. And I think that's important as part of I don't want to say professionalization of communications. I've always thought we were professionalized, but I think in certain big companies or even smaller companies, communications is earning more of a seat at the board table because of ESG. And then at the same time, I really want to echo Simon's point around the kind of the humanization that ESG and climate has allowed us to bring in. Certainly MSCI, like our clients are institutional investors, everything we do is pretty serious, but actually with climate change, we've been able to sort of humanize our corporate speak. I'm a big believer in communicating simply and straightforward, but it's actually allowed us to bring some more emotive language into this, because it is important. And that is a way as well, in your communications, you've got to garner that attention and reinforce that. So it's you're talking about something that people do want to emotionally connect with. And as a communicator, it's important to bring that narrative through in what you're saying and doing. So
yeah, I would agree, just echo Laura's point about the kind of wider impact. I mean, things like, you know, if you print big reports and send it to people, print presentation, you know, all of this, how can you do more digital? I mean, obviously to marketeers, this is, you know, fantastic. This is what we're trying to push on, but it's really playing into that. And it, you know, there's consequences across the business of things. And Laura mentioned business cards, you know, whether it's printing, whether it's, you know, carbon offset, whether it's carbon, you know, kind of trust on printing, you know, this is all consequential, and this is things that people are looking at and will be, you know, this is kind of almost reputation management as well as, you know, promoting what you're doing as well. So this all has consequences for communications.
Yeah, completely agree with both of your points there. Conscious of the time, I think before we move on to the next section, there might have been a few questions coming in. Kuldeep, would you mind just checking if any of those are ones you want to answer now or keep back to the end?
I think there's one that we'll keep back to the end, but there's one here talking about the 5 capitals in reporting. The audience member has said that sometimes this feels like it's difficult for everyone to understand, and has asked if there's any great examples that the panelists have seen in explaining all of these. And so I believe the five capitals are financial, natural, produced, human, and social.
So that's the Forum for the Future model. I'm racking my brains, and personally I can't think of any, but I can have a think. I don't know, Laura, Simon, if you've come across within, you know, the work that you've done, any good examples on companies that have used that model. As Kuldeep said, it's the manufactured capital, financial capital, social, human, and natural, I think is sort of like a bubble that all sits within each other. We can come back to it at the end, or equally, if we can take the name of the person who answered that question, we can always come back to them later if there's nothing. Laura, you're looking like you might have a...
it's not one I have seen good examples of. I have to admit, it's sort of reinforces the point of kind of what we want to see out of COP, which is mandatory international disclosures. So in the way that everyone reports their financials to a certain standard, we have that with climate, so there's less ambiguity and less opportunity for misinterpretation.
Yeah, absolutely. And Simon, I don't know, with Liontrust, obviously I know, and we come on to it a little bit later, you as a business have sometimes been quite vocal on some of your holding companies. Was there anything that you wanted to point to of you know, particularly strong case studies of businesses you've come across?
No examples from me. I suppose all I would say is that we're constantly every year trying to, in terms of our reporting, just try and be more transparent and show more evidence of impact and engagement. I mean, engagement is very important for our team. I think constantly trying to provide more information and more evidence of what's worked and what hasn't worked. And I think the owning up to what hasn't gone as well is really important, especially when it comes to things like green. You know, I think it's important for everyone to admit where they've not made as much progress as they have wanted, and what actions they're taking, and what they're striving to do. I think if everyone says, "Oh yeah, we're great," you know, we've done everything as well as possible, I think that will damage trust. So I think it doesn't really answer the question, but that's what we're trying to do from our side.
I think you raised an excellent point there, Simon, and this is something we discussed at length when we were doing our net zero commitment earlier this year. And in fact, one of the things that we highlighted in our commitment was that we would be sharing our learnings as a corporate entity, because a lot of this is like, as you know, as a company, you're kind of shooting out in the dark. Like we're all really navigating absolutely new territory here. And each sector is different. Everyone's scope 3s are different. It's your scope 1 and your scope 2 you can understand when it comes to climate disclosure. But actually it's learnings from others and seeing how people have done things is where we can all come together, because a lot of this ESG and climate, a lot of it centers around collaboration, and that is where success is going to happen, is from learning from others. It's not a case of doing it in the best, because fundamentally we're all here to, like, it sounds quite a broad plaudit, but to like save the planet, and we're trying to reverse and bring that global temperature down, and we're only going to do that all working together. So I think that is a really good point.
Yeah, I think it's probably reassuring for a lot of people listening in that, you know, MSCI and Liontrust, probably two of the companies you think about when you're thinking about ESG, are still on that journey as well. So,
and Julie, I think that kind of, I said I'll save this question to the end, but I think it kind of fits in well into the discussion now, and it's around fossil fuels and banks' financing of fossil fuels. The audience member saying that, asking for thoughts around some of these banks which are not completely divesting and are perhaps slower in their transition towards becoming sustainable businesses. How can, you know, they move the discussion and accelerate the change from investing in these fossil fuel companies and financing?
Yeah, and I think that probably comes back to one of our original points, which is the dangers of greenwashing and avoiding trying to, you know, say you're doing something that you're not. And I think this is also, and Simon, Laura, chip in if you have any views as well, but having worked on a few banks myself, I think you know, if you're thinking about ESG in the round as, you know, a bank who is financing these types of activities, there's, yes, absolutely the environmental pillar of ESG, and, you know, getting away from fossil fuels is key to that. But if you're also thinking about the S, and, you know, perhaps in some emerging economies, if you just pull the plug on fossil fuels, that's a disaster for many. So I think, to, you know, and what Simon's saying about storytelling is, there's perhaps some case studies and the education point there, where as communicators, we can help our clients frame that in a way that, you know, isn't greenwashing and is completely upfront, but tells the story in a, you know, in the way, this is why we're doing this. And it's not as simple as just saying, we won't fund fossil fuels anymore. I don't know, Simon, Laura, if you have any builds on that at all.
So I think when it comes to banks, there is the kind of broader divestment in the fossil fuel discussion, but there's also their role in facilitating the flow of that green and sustainable capital. So what are they doing to support entrepreneurs and innovators with the capital needed to scale and invent the clean energy technologies of tomorrow? What are the innovations that they're doing in corporate lending and corporate debt and equity issuance? And how are they tying that to terms of capital to the net zero objective? It's banks, they need to be developing and the support services and tools that help the carbon market and help providers the capital who manage risks. It's the divestment is an important part of that, but there's a lot of other activity that banks could and hopefully, and lots of them are doing it. Something we've talked about at MSCI at length, because, well, what we're doing is providing the tools and solutions to help investors better understand and drive the transparency in the market. But companies aren't going to go from being a laggard to a leader overnight. It's not going to happen. It is about the incremental change. It is about showing progress. So I think you'll have some banks that will fundamentally change and divest out of fossil fuels. There's no doubt about it. But you are going to have some banks that don't. So I think it's case by case. But that's it. For me, I see it, and certainly as well MSCI, because we did this in our call to action over this year. It's about the innovation. It's about driving that. 30 years ago, we didn't have your Amazons, things like that. In 30 years' time, the companies potentially that are the biggest companies in the world, they don't even exist today. So what are the banks doing on that side of things to help drive that innovation?
Anything to add, Simon?
I wouldn't want to comment on any individual companies or sectors. I'll leave that up to the our investment team. But I would answer it in a different way. Picking up a bit on what Laura's saying, engagement is really important, and it's a key part of the process of our investment team and other investment teams, and also trying to get companies to improve and have best practice. And I think that's a really key thing to communicate. And I think a key thing to communicate to clients and journalists that a lot of this is about engagement, and it's not necessarily just divesting from companies, but actually making them improve. And that's a key part of what we're trying to communicate. So hopefully that's answered it, not in relation to any particular company.
Absolutely. No, that's helpful. Okay, I think we'll move on, just in the interest of time, into our next section, where we're going to just talk a little bit about sort of the language and the jargon in the industry. You've already had one question that was probably, all these models are coming out, there's all these frameworks, there's a lot of jargon inherently in it. And I think, Simon, you obviously made the point around the levels of knowledge are, quite disparate across different groups. So, how as comms people, I guess, a question to both of you with your different hats on, how can we help combat this, or is it just going to get worse? Thinking about COP next week, is there just going to be a whole load of new stuff that comes out that we'll have to learn and get to grips with? I mean, what are your views on that? And Laura, I might just come to you first on that one.
Like ESG, it's an alphabet soup of acronyms. I sit in meetings and it just seems to be every day there's another one. I seem to get my head around and memorize and learn the ones that have come out, and then another whole raft of them arrive. And it's an irony there, because ESG is trying to sort of help simplify the investment process and bring in more insight. But I think this is a challenge I have at MSCI. I work with climate scientists, people that have PhDs upon PhDs, and they produce data and graphs and research, which it takes me kind of 10 minutes to understand. And I have to sit there really concentrating, and I have to point out to them that the man on the street doesn't understand it. Therefore, a lot of our kind of external audience is not going to understand something. And actually, I'd probably say at least 3 times a week, you need a PhD to understand this. How can we write this or how can we make it understandable for the man on the street? Because while that isn't necessarily always our audience, everyone wants to be able to digest information in a format that is simple and easy to understand, whether you are the cleverest person in the world or whether you're just interested in learning more about ESG. So I think my advice is just really keep it simple, particularly with transparency. We want to drive transparency, then the message needs to be simplicity in language, simplicity in tone, and the use of simple words. That's as simple as that, really.
Great. Simon, and you're nodding a lot.
Simplicity was the first word that I wrote down. I think, like any good storytelling, it's about being clear, simple. We've tried to keep away from this kind of taxonomy of words and just really focus on themes, trends, stocks, stories. As I said earlier, there's so many stories, whether it's brakes for trains to make them go faster, whether it's Kerry healthy eating, it's whether financial resilience, whether it's healthcare stocks. There's so many stories, and that's what we've tried to focus on. There's so many stats as well that lend themselves to these stories that can bring them to life. I think you can video stories about about wind power. There's so much, and I think we've tried to really focus on those and keep it clear, and that word again, simple. And I think, and rather than try and use try and avoid acronyms as much as possible. And I think you can do. I think you can avoid being dragged into that, and going back to the emotion. you can focus on this emotion that really engages people. And I think this of all areas actually is the most possible to do that, even though there are lots of terms and acronyms. Actually, it's easier probably for sustainable than almost any other area of investment, certainly than bonds, fixed income.
Absolutely. Okay, perfect. In the interest of time, I think I'll move on to our last sort of chunky section. Kuldeep, was there anything on language to cover off before we move on?
No, nothing further from the audience.
Cool, thanks, Kuldeep. So I think the next part that I was keen to cover is, obviously the fact that this has grown so much in recent years means, not only are there, it's just more widely out there, more journalists are covering it, more companies are talking about it. So, thereby perhaps increased opportunity, but also increased competition. And how do we as comms people make sure that we're managing expectations of our internal stakeholders with regards to the rising competition that there is for share of voice, given how many people are out there trying to talk on the same thing. And I guess it comes back to that point on sort of knowledge as well. More journalists covering is more options, but equally the fact that they're covering it more often means they're becoming more knowledgeable. And how do we make sure, coming back to the language point, that we're speaking in a way that is still interesting and informative, and sort of making sure we set that line right. So Laura, I don't know if you wanted to come in first with some thoughts on that one.
Yeah, we've seen a huge increase in sophistication by reporters in terms of their knowledge base. I think quite a few of them have had a steep learning curve. There's those who've were your kind of ESG trade publications who have had a really good grounding in that have gone on to kind of bigger or different roles. Certainly at the likes of the FT, there are now so many touch points across climate, whether you go to your sector reporters, your investment reporters, your banking reporters. We at MSCI have actually undertaken a huge educational program, just because we found journalists coming to us wanting to understand and knowing that we kind of have that data and the research to provide that basis, but also we were looking to mitigate negative coverage, if I'm being honest, things that were being misreported. So we have spent a lot of time with new journalists, those that are more experienced journalists, to really help them understand all the different nuances within ESG, and particularly climate as well, because some of them are, when it comes to, say, scope 3 emissions, they're perhaps doing their own analysis. So helping them understand how to work around that, what numbers to look at, what to understand, what questions to ask. Likewise, we also find journalists increasingly coming to us looking for that kind of research and data to help inform their stories. Or even we do a lot of work with some publications when they're just prepping for interviews. If they're going in to see a CEO and they've been told, we're leading the charge on this, we're doing that, they come to us and say, look, can we have a bit of background on this? Can we get their climate reports? Can we get their ESG reports? And we're happy to help them understand that. So it's I've seen a real shift change in that, sort of as an educational role, but also helping inform the journalists when they're writing their own stories and helping them really kind of differentiate, and to help with the greenwashing and the transparency. It's something that we're doing with our clients. We want them to have that information. So it's making sure, because our ESG ratings, one of the sources is we look at the press, we look at what these companies are putting out there. It's all scrutinized, but it's important that we're all working together on that.
Yeah, and I guess a question / point that kind of comes off the back of that is, it sounds like those inbounds, are less, can we have a comment on, and more, can we pick your brains and get some background on XYZ, which I think is particularly interesting when we're thinking about, what clients we put in front of journalists. And Simon, I guess I was wondering, same for you. You must be inundated with requests for background chats on. I know we come on to stocks in a bit, but on companies and Liontrust views on those. So I guess just a question on any builds on what Laura's just said, and equally anything that you wanted to cover off in terms of, the media landscape and how you're finding it.
Yeah, I was gonna say actually that I think, one of the interesting challenges is that journalists have increasing number of third parties to call upon, like MSCI, where they can check about asset managers. So you are, there is greater scrutiny and help for journalists, which is obviously a good thing. I think, yeah, definitely companies. I think journalists increasingly want views on companies. When companies make statements, announcements, they want views from investors, or companies, IPOs want views from the sustainable team. I think in terms of differentiation, I think I did kind of think, 3 words, stories, but we've kind of covered that. And I think give examples of companies was definitely bring it to life was one thing. I think the other things is reporting. I think definitely reporting is becoming increasingly important. Evidence of the impact that you're having. I think rather than just say, that is the next. I think that's the next phase that we've seen both from clients and increasingly from journalists and others now. They want that evidence of impact. They want that evidence of engagement. So I think that it's no longer enough to say. I think that's really key for comms people as well. And I just think varied content. I think, from thought leadership to 2-minute videos. I think, across different social and paid for, etc., PR, and just engaging people in whatever way they like to consume content and give that variety to get that engagement and awareness and to stand out. Yeah. And I think the final thing would be focus on what, this is obvious really, but I think it's good for us all to remember it, but just focus on what the investment, what you stand for and what you want to be known as. And I think it can be easy to try and, talk about too much sometimes. And actually that focus can really work.
I feel like we could have a whole nother one on purpose. I was going to ask a question and I thought, no, let's too much to delve into if we go into that with 10 minutes to go. Just a final question, I guess, on that, tied to some of the comments that you've just made in that section, which was around, the need to talk stock specific. Laura, obviously, you've said journalists coming to you and using your data, which is great, asking specific info on companies. What tips have you got on doing that well versus also the pitfalls to look out for when doing so as well?
When journalists come to us?
Yeah, well, just in terms of I know you've got the sort of leaders laggards piece that you do, which has been quite successful, but there must be a line where you have to go, where is it appropriate, where do we stop?
So we have really sought to help emphasize who is leading, who is trying, and who is making that incremental change. So our kind of seminal thought leadership, the MSCI Net Zero Tracker, utilizes the data that we have across our main index, MSCI ACWI, which has the data and insights for nearly 10,000 global listed companies. And what we want to do is help journalists better understand who's leading and who is not, who is disclosing. So what we don't just publish who's leading and who's lagging. We look at those who are disclosing more, those who have disclosed for the first time, because we want to celebrate the small wins. It's about showing that progress, and it really is important to us, coming back to our kind of purpose. It's about really helping demonstrate the importance, because we do believe that if people see, or other companies see those coming out there and seeing and being celebrated for disclosing more information, others will follow suit.
Yeah. Brilliant. Simon, just throwing it over to you, same question on the sort of, where you need to be a bit careful. I know, I guess of all the asset managers I sort of think of, Liontrust are probably one of the more vocal ones, specifically on companies, but you know, how as head of comms, you know, do you have to think about, you know, reining that in at all, and where is it helpful and where is it not so helpful?
I think I don't think we have a real issue with talking about companies. I think it brings it to life. I think it shows the positive impact of what they do. I mean, where they don't comment so much is where there's just a company that they don't invest in or isn't on them, particularly on, not on radar's the wrong word, but you know, they're not close to going into the portfolio. I mean, they have done sometimes, commented on companies, but sometimes, you know, if they don't see it as one of their companies, they won't do so. But they're very happy to talk about companies they invest in. I think it's really important that they're transparent about that, why. And there's some really interesting stories that they've got, and I think it just brings it to life. I mean, obviously, if there's controversies around companies that they're invested in, then we should all expect journalists to come and ask us questions. And I think, you know, picking up on one of Laura's earlier points, you know, I think this is a good thing, and this is where I think everyone's going to come under more scrutiny. I think when we're talking about sustainable, I think probably journalists will be very keen to hold everyone to account on that and to be able to explain that. But I think this is where engagement is really important, and being able to explain about the engagement that teams do with companies and explain that and what the impact of that is. I think it all comes down to impact and positive output, and just teams and comms being able to explain that. And, you know, transparency is so key. So.
Great, thank you. I'm conscious of time. Just to throw it to both of you for a sort of final thought, key piece of advice for our people watching, and then we've got 5 minutes then for a Q&A, so a short Q&A session. Laura, do you want to go first? Any final tips for people?
I think it's just the importance of meaningful engagement. Be strategic. Make sure your kind of ESG communications, whether it's from corporate or like your company that you work for, or whether it's to a stakeholder audience, it's got to be robust. It's got to be authentic. Test it internally. You're the communications professional. You're on the fight. You're on that kind of battle line. You've got to be able to substantiate what you're saying, and I think that's only going to become more important in the next 12 to 18 months.
Mm-hmm.
Right, Simon?
I would just reiterate, I suppose, a theme throughout this panel, really. I think this is the best opportunity for those in financial services, communications and marketing to use emotion in what we do. You know, it's about, you know, sustainability. This is about the future of the planet, society, the economy, and generating financial returns for investors. I mean, you can't get much more of a powerful combination than that.
Absolutely. Brilliant. Thank you both. We can throw it open to some final questions if anyone has any. Kuldeep, was there anything already on the chat or the Q&A box?
I'm happy to kick it off. I'm interested in finding out how you both keep on top of the ESG developments and, you know, the new standards of reporting and what companies are doing. Any useful podcasts or publications that you guys read that you find really, really useful?
Well, I've got I can definitely recommend MSCI as a
I was going to say, apart from your research team.
Oh yeah, no, we do. It's called ESG now, and it is really interesting. It's run by one of our researchers. He's actually quite an amusing chap as well, and they get some really great insights. One I personally really enjoy listening to is the sustainability agenda. It's led by a guy called Fergal Bryn, and he's like ex-BBC. I just find that actually an interesting listen to, personally. And then in terms of all the kind of actual news, what's going on, the ESG trades, environmental finance, pretty much leads the charge on what kind of that analysis is. And the FT has really stepped up its game, particularly on that thematic side of things. I want to say they've got like something like 6 or 7 almost dedicated reporters now to ESG, climate, sustainability. Like, that's huge. and the amount of content that they are pumping out and the scrutiny that they're taking, it's actually making for some really interesting reading. The journal, it's more companies they're doing, it's less on the thematic side, but that's the nature of their kind of editorial beasts, I'd say. They're my kind of go-tos.
Simon?
I would recommend the MSCI as well. I think, you know, there's various sources now. I mean, as Lois, you know, there's various news wires, publications, industry, investment association, indeed, as well. I mean, there's lots. I mean, we get a lot from the investment team as well, but there's lots of sources out there now that will provide updates and analysis.
Yeah, I certainly don't try not to miss an FT Moral Money newsletter myself. They're pretty good. Great. Any final questions with the 2 minutes that we've got spare? Feel free to use the chat Q&A box. Anyone who's on the line?
I'll let you know if anything comes through.
Good.
I think we're good.
Oh, bang on time. Brilliant. Well, thank you ever so much, Simon and Laura, for taking the time out of your day to speak to us. It's been really insightful, and I think I've got about 10 ideas for the next event now off the back of this. So thank you very much, and take care. Good evenings all.
Thank you. Thank you.
Thanks. Bye.
Bye.